$28,392. That is a real number. And for some retirees, a single visit to the Social Security office, one form, one request, is the only thing standing between them and that check. The average back payment already confirmed by the Social Security Administration for the people this applies to is $6,710. That is the average. Some people have received far less, and some, the ones who were hit hardest for the longest time, have received far more. The $28,000 figure is not a fantasy. It reflects what a retiree who lost a significant benefit for multiple years and who now has both the retroactive lump sum and the increased monthly amount stacking up can realistically see when they finally make the call. Most of them never make the call, and nobody from the government is going to tell them to. My name is William Hayes. For more than 20 years, I have helped families correct underpaid Social Security and recover money the SSA never told them they were owed. I am an enrolled agent and a senior benefits advocate. I do not work for the Social Security Administration. I work for people like you, people who paid into this system for decades and who deserve every dollar they earned. Today I want to walk you through one specific law, what it does, who it helps, and exactly what you need to do this week if it applies to you or someone you love. We are going to cover the Social Security Fairness Act, which was signed into law on January 5, 2025. We are going to cover the two provisions it repealed, the windfall elimination provision and the government pension offset. We are going to talk about the retroactive back pay, how survivors fit into this, and the exact steps to take at the SSA office. This is a long one, because the details matter. If you are watching this and you worked in public service, as a teacher, a firefighter, a police officer, a postal worker, a state or local government employee, or if your spouse did, please stay with me to the end. And if this channel has helped you before, a subscription costs you nothing, and it makes sure you see the next video. Hit the button now and come back to watching. Now, 2 myths. I hear them every week, and they are keeping people from money that belongs to them. Myth 1. This only applies to a small number of teachers in certain states. Wrong. 2 million people had their Social Security benefits reduced or eliminated by these two provisions. 3.2 million. That is not a niche group. That is teachers across the country. It is firefighters and police officers in states where public employees do not pay into Social Security through their government job. It is federal workers hired before 1984, when the federal pension system changed. It is some postal workers. It is state university employees. And critically, it is the surviving spouses and ex-spouses of all of those people. The states where this hits hardest include California, Texas, Illinois, Ohio, Louisiana, Massachusetts, Colorado, and Missouri. But it is not limited to those states, and it is not limited to teachers. Myth 2. If I were owed money, the SSA would have told me. No, they would not have. The Social Security Administration processes hundreds of millions of transactions. They are not in the business of calling you to point out that a correction now applies to your case. The responsibility to apply, to ask, sits with you. That is not how it should be. But that is how it is. Both myths lead to the same outcome. People who are legally entitled to corrected benefits and retroactive back pay sit at home, waiting for a phone call that is never coming. The form does not file itself. Let me explain what actually happened and why it matters so much. For decades, two provisions inside the Social Security Act penalized people who received a pension from a job that did not withhold Social Security taxes. The first was the windfall elimination provision, which I will call the WEP. The WEP reduced the Social Security retirement or disability benefit for workers who had a public pension from non-covered employment. If you were a teacher in a state where teachers do not pay into Social Security, Texas is a clear example, and you also had Social Security credits from a private sector job you worked summers or earlier in your career, the WEP cut into the Social Security benefit you earned from that private sector work. The reduction could run as high as roughly $580 a month, depending on the year and your earnings record. The second provision was the government pension offset, the GPO. The GPO was even harsher for some people. It reduced spousal and survivor Social Security benefits, the benefit a spouse or widow can claim based on their partner's record, by 2/3 of the government pension amount. In many cases, that 2/3 reduction wiped out the spousal or survivor benefit entirely. A woman whose husband paid into Social Security his entire working life could find herself receiving zero survivor benefit, simply because she had a public school pension. Zero. Both provisions were controversial for a long time. Critics argued they created a double penalty. People who had already accepted lower pay and public service, compared to the private sector, then got hit again when they retired, losing Social Security benefits they had earned or that their spouse had earned. On January 5, 2025, the Social Security Fairness Act, Public Law 118-273, was signed into law, repealed. Both of them gone. The law made the repeal effective for monthly benefits payable after December 2023. That means the correction applied retroactively to January 2024. Everyone who was already receiving a reduced benefit because of the WEP or the GPO was entitled to have their monthly payment corrected going forward, and entitled to a lump sum back payment covering January 2024 through the month. The correction was actually applied to their account. The Social Security Administration began issuing those lump sum payments in February 2025. 1 million payments totaling $17 billion. The average payment, $6,710. Confirmed. That is the average. But averages hide things. A retiree who had a large WEP reduction for many years, who was also claiming a spousal or survivor benefit that was zeroed out by the GPO, and who did not receive their corrected monthly payment until well into 2025, could be looking at a retroactive lump sum that is many times the average. When you add the higher monthly amount going forward, which for some people is a gain of several $100s a month, the cumulative value over even a short period stacks up fast. That is how you get to $28,000. That is how real people are getting to $28,000. Not as a guarantee for every viewer, I want to be very clear about that, but as a real outcome for people in the highest impact cases. Now here is the detail that almost nobody is talking about. If you were already receiving Social Security as of January 2024, the SSA should have automatically adjusted your benefit and sent your back pay. Many people have already received it, but the SSA is not perfect, and not every affected person has been processed correctly. You need to verify that the correction actually happened on your account. And if you are a survivor, a widow or widower, or a divorced spouse who is entitled to a benefit that the GPO eliminated entirely, you may not have been in the system at all. A benefit that was reduced to zero disappears from active records. You may need to file a new application, not just wait for a correction. That is a critical distinction. The SSA cannot correct a benefit that shows as zero on your record without you coming in and asking. The same is true for people who were never told they were affected by the WEP or the GPO in the first place. If you left a public job years ago, started collecting Social Security, and simply assumed the amount you received was correct, it may not have been. Call and ask specifically. Confirm with the SSA that the Fairness Act correction has been applied to your account. Do not assume it has been. I want to tell you about a woman I will call Patricia. Patricia taught 4th grade in a large Texas school district for 31 years. Texas teachers, in most districts, do not pay into Social Security through their teaching job. But Patricia had worked retail jobs in her 20s, and she had a few years of Social Security credits from that work. Not a fortune, but real credits she had earned. When Patricia retired, she discovered two things. First, her own small Social Security benefit from her retail years had been reduced by the WEP cut substantially because the formula treated her as if she had low lifetime earnings in covered work, when in reality, she had simply spent most of her career in a non-covered teaching job. Second, and more painful, her husband, Robert, had worked in private industry his entire life and had built a solid Social Security benefit. Robert passed away 3 years before Patricia retired. She expected to receive his survivor benefit. Instead, the GPO reduced it by 2/3 of her teacher's pension. Her teacher's pension was large enough that the 2/3 reduction wiped out Robert's survivor benefit entirely. She received nothing from his record. For years, Patricia received only her own reduced WEP benefit. A few $100s a month. Not enough to matter much, but the principle of it mattered enormously. This is a composite case. A picture built from the patterns I have seen across many real clients. Not one specific person I am identifying by name, but the situation Patricia represents is real. It is documented. It is what the law was designed to fix. When the Social Security Fairness Act passed in January 2025, Patricia's situation changed fundamentally. The WEP reduction on her own benefit was removed. Her monthly check went up, and the GPO that had zeroed out Robert's survivor benefit, gone. She was now entitled to claim the survivor benefit she had been denied for years. Because her survivor benefit had been zeroed out rather than merely reduced, she needed to file a new application at the SSA office, not just wait for an automatic correction. She went in, brought her pension documentation, and applied. The retroactive back pay covered the survivor benefit from January 2024 forward. Added to the correction on her own benefit, and accounting for the months it took for the SSA to fully process her case, the total between the lump sum payments and the cumulative gain in her monthly check moved into territory well above the average. Not the exact title figure for every person, but for Patricia, and for people in comparable situations, the number is real. Confirm with the SSA. Ask specifically about the Fairness Act and what it means for your case. Now let us talk about the look back and the timing, because this is where people leave money on the table. The Social Security Fairness Act made the WEP and GPO repeal effective for benefits payable after December 2023. That means January 2024 is the earliest month for retroactive benefits under the Fairness Act for most affected people. The SSA has confirmed this: 1 year of retroactive benefits for those who were already receiving benefits or who had applied on or before January 2024. For some newer applicants, the SSA has in certain cases limited retroactivity to 6 months, which has drawn pushback from Congress members who want the full year honored. If you believe you are owed more retroactive pay than you received, that is worth raising directly with the SSA and potentially with your congressional representative's office, which can file a congressional inquiry. But there is a separate category of back pay that goes beyond the Fairness Act, and I want to make sure you know about it. The SSA can and does make payment errors that are entirely unrelated to the WEP and GPO. Clerical mistakes. Earnings records that were not credited correctly. Survivor benefit calculations that used the wrong base amount. Administrative errors in applying a reduction or delay. When the SSA made the error, when it is an agency mistake, not a policy provision, federal regulations allow the SSA to reopen a prior determination and pay back the corrected amount even for years before the standard appeal window closes. This is not automatic. You have to identify the error, document it, and formally request that the determination be reopened. How do you find those errors? You start with your Social Security statement. Every worker with a My Social Security account at SSA.gov can see their full earnings record year by year. If a year is missing, or if a figure looks wrong compared to your own records, tax returns, W-2s, old pay stubs, that is where you start the conversation. Survivors should specifically ask whether the benefit amount used to calculate their survivor benefit was the correct primary insurance amount from the deceased worker's record. Errors in that calculation happen more than most people realize, and they compound over time. The tool for any of this, the Fairness Act correction, the survivor benefit claim, the error reopen request, is a conversation at the SSA, backed by documentation you bring with you. The form varies by what you are asking for, but you have to ask. Here is what I want you to do this week. These are not vague suggestions. These are steps. Step 1. Go to SSA.gov and log into your My Social Security account. If you do not have one, create one. It takes about 15 minutes and you will need your Social Security number and a valid email address. Once you are in, pull up your earnings record. Go year by year. If you see a 0 for a year you worked, or a number that seems far too low, write it down. You are going to need that. Step 2. Look at your current benefit amount and think about your work history. Have you ever worked a job that did not take Social Security taxes out? A state or local government position, a public school, a municipal department? Did your spouse? If the answer is yes, there is a real possibility the WEP or GPO affected your benefit, and the Fairness Act correction may not yet be fully reflected in your account. Step 3. Call the Social Security Administration at 1-800-772 1213. When you get through, and yes, wait times can be long, so call early in the morning, Tuesday through Thursday, and have your Social Security number ready. Ask specifically, has the Social Security Fairness Act correction been applied to my account? If you had a WEP reduction, ask whether it has been removed. If you or your spouse had a GPO reduction on a spousal or survivor benefit, ask whether the GPO has been lifted from your record and whether you need to file a new application. Step 4. If you have a public pension, bring your pension award letter or your most recent pension statement to the SSA office. The SSA needs to know the correct pension amount to process the Fairness Act adjustment accurately. If they have the wrong pension figure on file, which does happen, the correction they apply will also be wrong. Step 5. Ask about back pay. Do not wait for them to volunteer it. Ask, am I entitled to retroactive payments under the Fairness Act, and if so, when will I receive them, or have they already been paid? Get the answer in writing if you can. A printout of your account notes, or a confirmation number from the call. If you are a widow or widower whose survivor benefit was eliminated by the GPO, ask whether you need to file a new application for survivor benefits now that the GPO has been repealed. The answer may be yes. Filing that application is the form that starts the clock. This is general education, not personal legal, tax, or financial advice. These rules really do vary by state and by income. Always confirm your own situation with your county, your state SHIP office, the IRS, or a qualified professional before you act. Being legally entitled and actually having the money are two different things. The only bridge between them is the form, and the agencies are not going to build it for you. So we will. If this video helped you, share it with one person who worked in public service, one teacher, one firefighter, one police officer, one person who spent a career serving the public and deserves to know this exists. They may not know. They probably do not. And next time, I am going to walk you through the one IRS form that can legally stop the government from taxing your Social Security benefit. Because yes, that exists too, and most people never use it. That video is coming. Stay with me.